The labor market is cooling down, and this shift is strengthening the argument for the Federal Reserve to cut interest rates soon, while the housing market is clearly tilting in favor of buyers. But here's where it gets controversial. Many homeowners still cling to outdated expectations shaped by a very different real estate landscape from decades ago. Today's housing market looks nothing like the one previous generations experienced. Affordability has taken a hit as new home construction has failed to keep pace with demand. Yet the supply of homes available for sale has increased enough to give buyers more leverage than we've seen in about 10 years. This means buyers are no longer at the mercy of sellers, and negotiating power is shifting. Long-time homeowners have built up significant equity, often worth several times their original purchase price. This financial cushion gives them flexibility. If they decide to sell, they might just need a bit more patience and some expert advice to navigate the many changes that have reshaped the market. The hope for a Federal Reserve interest rate cut, already high, gained even more momentum after the latest jobs report from the U.S. Bureau of Labor Statistics. The report showed that while employers are still hiring, the pace has slowed considerably, with only 22,000 new jobs added. Unemployment remained steady at 4.3%, and wages continued to rise, but the overall trend points to a cooling labor market. A particularly notable milestone emerged from July's labor turnover data. For the first time since April 2021, the number of unemployed job seekers surpassed the number of available job openings. This signals a shift in the labor market dynamics that could influence economic policy decisions. Investors were already almost certain that the Fed would reduce rates in September, and neither the recent jobs data nor potential changes in Fed leadership have shaken that expectation. The upcoming Fed meeting will be closely watched for clues about how policymakers view economic growth and what they believe is the right course for interest rates over the next year. As anticipation builds around the Fed's next move, mortgage rates have started to decline, recently dropping to 6.5%, their lowest level in nearly a year. This is encouraging news for home buyers currently in the market, and might also prompt some homeowners who locked in high rates 2 years ago to consider refinancing. However, this rate drop may not be enough to motivate a large wave of existing homeowners to move or refinance, since about 81% of them have mortgages with rates below 6%. This means many are still holding on to favorable loan terms that make selling or refinancing less attractive. Supporting this, weekly housing data reveals that while new listings are increasing, the pace of growth is slowing, and price appreciation has leveled off. Homes are staying on the market longer, and the surge in active listings is losing steam. These trends suggest that sellers no longer enjoy the strong advantage they had in recent years. Adding another layer of complexity, a Realtor.com analysis found that 1 in 4 homeowners has lived in their home for over 25 years. Their expectations about home values and market conditions are often based on a very different era, which can lead to mismatches between seller hopes and current market realities. Finally, as the nation faces ongoing challenges from hurricane season in the south and east and wildfire season in the west, Realtor.com released a climate risk report highlighting that over $12 trillion in real estate value is vulnerable to severe threats like flooding, hurricane-force winds, and wildfires. These risks are not evenly distributed, which is reflected in the wide variation in homeowners' insurance costs, from less than 1% of a home's value annually in many areas to more than 3% in the most high-risk markets. This raises important questions. How should homeowners and buyers factor climate risk into their decisions? And with the labor market cooling and the Fed poised to cut rates, will the housing market continue shifting power to buyers? Or could unexpected factors reverse this trend? We'd love to hear your thoughts. Do you agree with the outlook presented here, or do you see things differently? Share your perspective in the comments below.